Hey everybody, it's me again, Dan Rawich. It's now about 10:40 on Wednesday, and so I did get filled on the last trade we talked about, which was a sale of what did we sell? We sold Grub, which is Grubhub. We took a $633 profit, on a relatively small investment. It was a 97% return. And we got filled at 3 cents. So I kind of left you hanging. I put in the market order, and I didn't get the fill price yet. So we've been filled. We also then started talking about Decker, which was a position I was thinking about taking. I'm not going to take it, and I think you can learn a lot by understanding why I'm passing. And the reason is, I think the stock's got more upward play than downward play. I do. But if I were to sell a put right now, just to really be safe, I want to get down to about 115. Now, mind you, that's ultra conservative. I think there's money to be made here if you sell the put down to $130. But I don't like marginal trades. I like to get as sure as I can, and so that would take me down to 115. We just can't get paid enough if we go down that low. The other thing is, I want to talk about the difference in these various trades. So here we're talking about only selling a put. Fine, easy. However, the margin requirement when we do a trade like this is much greater. So for those of you that have smaller accounts, you won't be able to take some of these trades. So for every trade that I take like this, because these are simple, easy, I'm going to also take a more complicated trade, which I'll explain, and you'll just follow me and you'll be able to do it. But they will lock in a loss or a profit. So you don't even have to, it's literally set it and forget it. Although clearly you want to monitor the position from time to time, because if it's up enough, you might want to close it out. So I went to decide, okay, well, how do I take a position here that's safer for everybody? And when I looked at it, I couldn't really capture the spread of what I think this movement's going to be. So that's number one. The spread was too big to do a more complicated trade, and we don't get paid enough to go down to make a safer trade. The other thing that's happened is, well, the good news is the stochastics yesterday, remember, it was overbought. Now it's moved to about the midpoint. It's getting closer to oversold, which is good, but it's still in the middle. The other thing I told you, the reason I started looking at this was because the volatility had been climbing, and I like that. However, upon further reflection, and volatility is sort of everything when you're selling these things, and it takes a long time to really understand it, but I'll try to simplify it here. So this is the historic volatility. So you can see the historic volatility is about 27. That's okay. There's stocks that are 0, but you can see back in early June it was 37. So although it's turned up, it's still not nearly where it was before. Then we have the implied volatility, which is just the current number, and while it was turning up, today it started turning down a little bit. And the same thing here in terms of just the implied volatility for puts. Yesterday it was at 28. Today, yesterday it was 33, and now it's down to 30. So we're kind of losing volatility, and I don't want to be a put seller here. So the next thing I looked at was, okay, how do we take a more complex trade? And this might be a little overwhelming, but it's okay. When you see this enough times, it's going to sink in. So let me pull up my chart here. Oops, I don't want to pull up the chart. I want to pull up my trade tool. Okay, so, boy, this is what I would do. Now, here's what I love about this trade. Not this trade in particular, but this type of trade. So the last way I showed you is if you sold an option and you agreed to buy it back. Let's just say you agreed to buy it back at $100. Wall Street is going to pretend that you might actually own that stock. So let's say you sold 10 contracts to make decent money. 10 contracts might make you $400 or $500. Well, that 10 contracts could imply you might end up owning $100,000 worth of stock. Mind you, that's never going to happen because we set stop losses. But as far as Wall Street's concerned, it could happen. So they don't require you to have $100,000 in the account. They'll require you to have 20% of that, so $20,000. And a lot of you might jump into this with $5,000 accounts, which is fine. So we're going to be doing a lot more trades like this, but I'm going to continue to spend time showing you just how to sell puts because it's more simple and you'll understand it, and then we'll layer on this knowledge. So the complex trade is really trying to capture the range that you think is possible. So and then still make some money at it. So here's the good news. The good news is this range, meaning a low of 115 and a high of 135, would cause a max loss of 148 and a max gain of 850. You could be wrong a lot of times and still make money when your win to loss ratio is what, 7 times, I think. So that's cool. But what's not cool, and you can see here it says break even between 116 and 133. So anywhere in here, we make money. Great. But what I don't like is the stock's already trading above that price. And I think this stock has more room to go up than down. And as I try to go further up in price to have a higher range, then all of a sudden it just becomes ridiculous. Let me show you that real quick. So right now this trade is set. It's called an iron condor. It's set to break even between, what did we say, 116 and 133. And my concern is we don't have enough room to go high. If we did this, I love the win to loss ratio here. But let's just say I want to go higher. I want to be able to make money if this thing goes to 145. Because I think that it could do that. So I'm going to set this closer to maybe 135. But I still want to protect my downside. So from, call it 115 to 125. Now my break even is closer. It's 120 to 140. That's a pretty good looking security blanket. However, you've got a potential to lose 500 and the potential to make only 450. Well, that's just stupid. So even though I feel super safe in this range, I feel really stupid with this win-loss ratio. So we're going to pass on this one. I'm going to pause for now. I'm going to find another candidate because I try to take a trade every day. So let me pause this and I'll be back. Wow, I've been working for a couple hours. I've looked at a number of different positions and I'm kind of settling in on KSS, which is coal, and I'll show you why real quick. First of all, let me get the chart up. So I like, when I'm selling puts, I've talked about volatility. The reason I look for high volatility is the chances are the volatility will drop. And as the volatility drops, the stock settles down. And what we want, typically when we're doing options, when we're selling options, we kind of want things to chill out and stay around where we bottom or go up. And then we want to leave a little room to go down. So when I see a kind of a tight trading range like this, I like it because it's easier to make money. So we have about a $10 trading range. You can see it's 68. There's a lot of support. If it did drop to 68, it could go to 58. Now, I also like their earnings. Next earnings report isn't until August 20th. So I'm going to take a position that gets us out before August 20th. And I like that we're in an upward trend line, so the chances are we continue to climb. I will take a stop loss on this trade, and we're going to do all that right now. So let's go into my trading tool here, and you can see here I've got the order all filled. Actually, while I've been talking, the value of this option has gone down. So had I taken it before the video, it could have made a little bit more money. So I'm going to sell 10 contracts. Oops. 10 contracts, and at a $68.50 level, that's just a tiny bit above support. Actually, now it's more efficient here to go 68 on top of support, and you can see where all the money's betting. The money's down here. 1,482 people are looking to either buy or sell at the 67.50 because that's just a tad below support. So if we go a tad above support, we do a little bit better, and we're not going to let it get down there. If it gets down there, we'll be out of this trade. So actually, we're going to take a $69 position here, and I'm going to put a limit price in. Spread here is big. So basically, if I just put in a market order, I'd probably get filled closer to 35 cents. If I were patient, I might get as high as 60. So I'm going to put in a limit order at about 45 cents. So, and what that means is I won't get put in this position unless it's at that level. And I'm going to make this good till canceled because maybe we'll get filled in a couple of days. And of course, we're selling to open. We are always, not always, but most of the time, we're selling options, selling puts. So we're going to sell 10 at 45 cents, and that means we could make $450. And the longest we could possibly be in this trade is 17 days. because in 17 days this option expires, and as long as the stock stays above 69, the guy that bought the option from me it expires worthless for him, and I get to keep the money. So as soon as we do this trade, we're going to put $450 into our account, and then we're going to set a stop loss, and I want you to see me do all that. So let's review this order. Okay, so $438 will be the proceeds when I make this trade, or when I get filled, I should say. And actually, you know, one thing I told you I was going to put a stop loss in. Did we get filled? Wow, we got filled, and we got filled at 45 cents. So, okay, now we own this, and now we're going to go in and put in a stop loss. So what I do here is this time we want to buy it to close it, okay? Because we already sold it to open it. We own it. Now we want to get out of it, and so that's called a stop loss. So we'll put in a stop. You can do trailing stops, you can do limits, but for simplicity right now, I'm going to do a stop. And all that's doing is telling Wall Street, if this thing gets below, I'm going to say, I don't want to lose more than half. So I'm in it, what, 45 cents? So if this thing gets down to 25, I'm going to give myself a little room here. If it gets down to 20 cents, then we'll be out of this thing. So the most we can lose here on this trade is $250, and we could make whatever that was, $450. So that's close to my 2-to-1 rule. And now I don't know if you noticed, but a minute ago when I took the trade, it said max gain $495 because that's how much, or $450 because that's how much I get paid for selling the option. But it said max loss $43,000. That would be true if we didn't put a stop loss in. This stock could crater and we could lose everything. We don't do that. We never, ever, ever do anything without a stop loss, okay? Unless it's a more exotic trade where the stop loss is built into the trade. So I got a stop loss, good to cancel, to sell, to buy back 10 of these things at 20 cents, okay? Okay, guys, sorry I'm back. You don't know I was gone. I edited a little bit. So I'm putting in the stop, and I was going in the wrong direction. I can't talk and trade at the same time. I got to get used to doing this. So we own it at 45 cents. So we want to get out of it if it starts going up, because if the option goes up in price, it means the stock's going down. And so this is where we decide how much we want to lose. We own it at 45 cents. I don't want to lose more than 25 cents. So I'm going to buy this thing back at 70 cents. So that means I would have to spend $700 to buy this back, but I already got paid $450. So my max loss on this trade would be $250. And so we'll put that in, stop loss, good to cancel at 70 cents. Review this. So here it goes, tells us how much we'll have to pay to buy these shares back. But again, we already have $450 of this money in our pocket. So this way, if God forbid something happens, we're out and we don't have to worry about it. Okay. There's more I need to teach you about stop losses, but we'll go into that later. So now let's just place this order. Okay, that's done. And the market's about to close. Okay, so that's it for now. And then the next video, I'm going to talk more about some of the exotic trades